when the all at once happens, it will shock people. Like to Rafi's point, no one knows that silver is over 30 unless you're in our camp. And it's a very big deal for the people in our camp. Most people wouldn't know a silver dollar if it fell on their foot, or the ramifications of rising silver, what it really means, or massively rising gold and de-dollarization. All of this stuff we focus on, the public is asleep.
We're just starting to see that. It's not like the public even recognizes what's going on, because 30 means a lot to us, right? Because we follow the market. But 99% of people have no idea how much silver is. And if you told them, it wouldn't mean anything, right? Like, what do they have to do with it? So, we have a long way to go here.
Silver prices recently reached an 11-year high, propelled by optimistic economic data that has heightened expectations for interest rate cuts by the U.S. Federal Reserve. This surge has made silver the best performing precious metal of the week, experiencing a remarkable 11.29% jump and surpassing the $30 per ounce mark for the first time in over a decade. Bloomberg attributes this surge to the projected fourth consecutive year of market deficit in silver production, indicating strong financial and industrial demand behind silver's rapid ascent. Endgame investor Rafi Farber attributes silver's remarkable rise to a growing lack of confidence in the dollar system, a sentiment resonating more strongly with the general public than with financial elites. Supporting Rafi's view, legendary analyst Andy Schectman points out that the weakening US dollar index, falling below 104.50, reflects a loss of trust from other countries. Moreover, the extensive monetary expansion, particularly during a period of near-zero interest rates, has significantly distorted asset prices, potentially leading to stagflation, characterized by stagnant economic growth and high inflation. This shift marks a departure from when global demand for dollars and U.S. treasuries was robust. Andy asserts that a significant turning point may come with a swift, massive sell-off of dollars and treasuries. Bloomberg reports that China has sold a record $53.3 billion worth of treasuries and agency bonds in the first quarter, indicating a deliberate move to reduce its U.S. debt holdings to support its weakening yuan. Concurrently, China has increased its gold reserves to their highest level since 2015. While China has gradually reduced its holdings, the much-anticipated all-at-once moment has yet to occur. When it does, it is likely to catch many by surprise, as the general public remains largely unaware of the current value of silver and its broader implications. The surge in silver and gold prices and ongoing de-dollarization efforts underscores a growing dissatisfaction with the U.S. financial system. We will present clips from Andy Schectman and Rafi Farber's interview with Arcadia Economics. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Once you have the fiat system so heavily based on debt assets, right? If debt and currency are the opposite sides of the same coin, then the more currency you have, the more debt you have to have, since all the currency represents debt anyway. Once it's so saturated with debt, then when you bring down the value of debt, it's going to hurt the value of the currency rather than help it. And that's the paradigm shift that most people can't. It's hard to step into because it reverses thinking, and I think that's why silver is really going up. And again, it's not really going up. It's just the dollar going down. The silver is just a measure of how the message of the end of the dollar system is resonating with the public rather than with banks or with the rich people, right? Because they're not the ones who are going to buy silver and when they get nervous. It's going to be the public, and we're just starting to see that. It's not like the public even recognizes what's going on, but 99% of people have no idea how much silver is, and if you told them, it wouldn't mean anything, right? Like, what do they have to do with it? So, we have a long way to go here. On the one hand, and on the other hand, maybe not so long. It's hard to tell now when things get this unstable.
Yeah. Whereas in years past, everyone wanted dollars, everyone wanted treasuries, everyone wanted to be part of the American system, and that system no longer, I think, is inspiring as many participants as it once were. So yes, I see this exact same way that Rafi does, maybe hyper stagflation, higher prices, higher taxes. What did the knucklehead say? If he wins again, he wants to raise capital gains to 44.5%. He wants to raise income taxes. He wants to impose a mandatory tax on unrealized gains for the very wealthy, higher taxes, higher inflation, little or no economic growth. And I do see a time where the world finally, that all at once moment triggers, and there is a dumping of dollars, there is a dumping of treasuries that accelerates, not just what we've seen slowly and methodically and orderly, where China has gone down to 750 billion from over 2 trillion, almost 3 trillion. That's the little by little by little. The all at once hasn't happened yet. But what I do think, when the all at once happens, it will shock people. Like to Rafi's point, no one knows that silver is over 30 unless you're in our camp. And it's a very big deal for the people in our camp. Most people wouldn't know a silver dollar if it fell on their foot, or the ramifications of rising silver, what it really means, or massively rising gold and de-dollarization. All of this stuff we focus on, the public is asleep. And so I see the exact same thing: higher prices, higher yields for longer, and continued de-dollarization and de-treasurization that we continue to foster, where Janet Yellen has the nerve to tell China, if you give 1 penny to Russia to aid their war machine, we're gonna sanction your banks, your companies in Beijing itself. Don't worry that we've given 200 billion to the Ukraine with no congressional oversight. That's our business, and we're the world reserve currency. This is not settling well with the Southern Hemisphere. So yeah, I think that's exactly what will happen. Now, to your point, what does it look like? Who knows?
Silver's demand surge, fueled by its financial and industrial roles, faces a significant challenge due to a persistent market deficit. With this year's shortfall set to be the second largest on record, industrial users are grappling with dwindling inventories. LBMA monitored stockpiles hit their second lowest level ever in April, while volumes at exchanges in New York and Shanghai are currently at seasonal lows. TD Securities warns that LBMA stockpiles could be depleted within 2 years if demand continues at its current pace, raising concerns over potential overstatements of available metal volume by LBMA, including ETF holdings without transparency. Amidst the backdrop of declining supply, China's intensified efforts to strengthen its silver reserves are a significant development. By 2024, China is expected to emerge as the world's second largest silver producer, strategically positioning itself to meet surging demand. One strategic move involves widening the arbitrage spread to entice traders to purchase in the West and deliver in Shanghai. This proactive approach underscores China's steadfast commitment to accumulating precious metals, a move that could have significant implications for the global silver market. Let's get back to the interview.
Report that came out recently, and it came out by TD Securities in Canada, that said that the Chinese are massively understating the volume or the amount of metal that they actually own. And when you realize that the LBMA, there was a report that in April that the stockpiles held by the LBMA in silver are the second lowest they've ever had on record. It's a 140-year-old exchange. China maybe realizes that, so they're trying to turn up the arbitrage spigot by putting silver almost $4 higher, so that the traders who do have the ability to purchase in the West are able to do so and deliver in Shanghai, those that have that ability. And there's been a lot of talk lately about the exchange for physical, in terms of all of the exchange for physicals being sent to Brinks, Hong Kong, which is a COMEX facility. Huge amounts of gold kilobars in particular, large amounts of kilobars that are leaving the Western vaults. It's the mini contract on COMEX, and is being delivered in exchange for physical off, in the OTC market, really. And then the theory is they're being trucked directly from Hong Kong to the Shanghai Gold Exchange. So they are trying any way that they can to accumulate whatever they can, whether it be by exchange for physical, whether it be by taking whatever they can out of the LBMA, whether it be taking whatever they can out of the COMEX, whether it be backdooring the ETFs. And I think now what they're trying to do is arbitrage. That $2 premium became $3 and now is almost $4. They're turning up the heat to attract as much arbitrage as possible. I think they think very shrewdly, cunningly. They are 2-3 steps ahead of the game. And to me, that's what that really symbolizes. When you see Shanghai Metals Exchange, which in terms of volume, when you add the Shanghai Metals Exchange and the Shanghai Futures Exchange, the average daily volume is greater than the COMEX now. It is effectively the number 2 largest center in the world for trading metals behind the LBMA. And so, yeah, I think that's exactly what you're seeing. You're seeing the industrials freak out and they realize, man, it's getting hard to get, and they're trying to get all they can. And the Chinese are doing the exact same thing. There's this battle, if you will, between the industrials and the investors, or the industrials and the accumulators. And I think ultimately that's what will happen. There will be a battle between the companies who need it to survive and the countries or the investors or the sovereign wealth funds or the central banks who think they need it to prosper and advance. And I think that battle is happening right now in front of us. It just, no one's really talking about it. But that to me is exactly what's happening. And that's why you see arbitrage going higher, because they figure, well, if we can't bleed the exchanges, if there's too much competition, let's just crank up the heat. And all the traders who can buy in the West and deliver in the East will do just that. So I don't expect that to change. In fact, I wouldn't be surprised if ultimately we wake up one day and see, the exchanges in Dubai, in Shanghai, and in Moscow buying silver at $50 an ounce and buying gold at $3,000 an ounce. And just like that, everyone who's stupid enough to pry free what is available to be pried free will do so, will arbitrage it, and never coming back. The difference is the people in the West here have a very short time frame. The instant gratification is not fast enough, and the Chinese, for whatever their shortcomings, they are very strategic, and they do things in a very methodical, regimented fashion. And that's, to me, what this is. And it's a trend that has not gone lower, but is only going higher. And interestingly enough, mostly in silver. The arbitrage with gold isn't that great. What did he say gold was at today, our friend, the ghost? He says it's at 24.68. Well, what do we got spot at right now? 24.30. So they got a $40 spread right now in gold, but a $4 spread in silver on a percentage basis is massive. So yeah, I think this is something we will continue to see happening. It's their way of accumulating whatever they can possibly get.
Silver's trading pattern suggests a potential pullback, with over-leveraged retail traders at risk. While $2 may seem significant, recent sessions have seen larger swings. A breach of $31 could trigger further declines to $28.50. Although $50 remains possible, historical trends indicate sharp corrections at this level. Caution is advised in the current market climate. Where are the prices heading next? Share your thoughts in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.